Welcome everybody to today's webinar on senior housing investments. I am your host, William Bonati, and I am joined by special guest, Michael Osterhoff. Today, we will be talking about senior housing and why it is a compelling asset class. We welcome any questions or comments that you may have, and we will address those at the end of the webinar. So let's go ahead and jump into the agenda for today. So we'll be doing some brief introductions first, and then Michael is going to share his insights on senior housing trends and their most recent project, which the JKAM fund has invested in. And I'll share some data on senior housing and why we really like this asset class, and talk briefly on the JKAM Diversified real estate fund and the fund asset allocation. And then lastly, open it up to any questions or feedback that you may have. So let's go ahead and get started. So for those of you who don't know me, I am William Bonati. I grew up in Colorado and got a degree in finance and real estate from Colorado State University. And right out of college, I obtained the Series 7, 66, and Life and Health, and spent 7 years in the banking investments industry, and then transitioned into more of an entrepreneurial career through investing in real estate. And like many, I started out with wholesaling houses, flipping houses, and then I ended up building out a portfolio of non-performing loans because this was really scalable and something that I could do remotely. And while I was living in New York City in 2014, I connected with Jack Krupe and then ultimately joined his team at his fund to run his NPL dispositions trade desk. And I was there for 2 years, and then both Jack and I left and have partnered up again to run the JKAM Diversified Real Estate Fund. My family and I currently live in Vail Valley, which many of you know of or visit from time to time. So if you're ever out this way, let me know. Michael, thanks so much for joining us. Why don't you bring us up to speed on your story and background?
Yeah, thanks, Will, for having me. It's great to be here this afternoon and just to talk a little bit about the senior living space. So by way of background, I'm married. My wife and I have 6 kids, so we stay pretty busy. But I am one of the partners of Meadowview Senior Living with Robert Sample and Mike Schonecker. By way of just background, I'm an attorney by trade. I've been an attorney for over 20 years. I was in the intellectual property, healthcare, and corporate space for quite some time. Did a lot of work in the healthcare space as a partner at Perkins Coie in downtown Chicago, and then transitioned into the general counsel role for a healthcare company down in Dallas as well, and then eventually transitioned over to senior living. So I did quite a bit of passive investing in the multifamily space, student housing, public storage, the usual commercial real estate routes, and then really, senior living really caught my eye. I like the niche, and saw a lot of opportunity there. I did graduate from the University of Illinois undergrad and got my law degree from the University of Missouri in Columbia, and currently reside in St. Louis.
Awesome.
Yeah, sorry, go ahead.
Six kids, Michael. That definitely keeps you busy, I'm sure, huh?
Yeah, compounded by the fact that they're 6 teenagers. So it's a fun, drama-filled home, that's for sure.
Yeah. Every day is interesting, I'm sure.
It is. A lot of enjoyment. And a little more background on my partners too, Robert Sample and Mike Schonecker. So Bob Sample's been in the space. He's been in the healthcare space for over 30 years. He's built and developed over 15 senior living communities. And my other partner, Mike Schonecker, he's been in the space, I think, since the mid-'80s. He's developed over 50 senior living projects. I believe he's done over 500 or so market studies. So just a lot of depth and experience among our team, which, as you know, is just the key to really achieving success on a going forward basis.
Yeah,
and then,
absolutely.
Our other partners in the space who are just critical to our entire team is our general contractor, Bradbury Stam. So Bradbury Stam has built, I think, over 50 senior living communities across, I think, 5 states. Trost & Wright is our preferred architect. They've designed over 100 senior living communities across the entire country. And then one of our key partners is Cassia. So Cassia is our property management group. They manage over 60 senior living properties across a number of states in the Midwest and Florida as well. They're a recent merger between Elam and Augustana, and just have an incredible depth of knowledge, experience, ramp up for new construction projects, and just a real passion for serving seniors. And that's what really drew us to them, is their passion for serving and caring for our senior community.
Yeah, it's
partnership.
Yeah, it's impressive the depth of experience that you and the team at Meadowview have, and that's one of the reasons why we really like the stuff that you're doing. So why don't you tell us a little bit about or a little bit more about Meadowview here?
Yeah, so this is a sample of our portfolio, and you can learn more about us at meadowviewseniorliving.com. So that's all one word, meadowviewseniorliving.com. We currently have 5 projects that are within our portfolio, 2 in Minnesota and 3 in Iowa. 3 of the projects are operational, 2 are currently under construction, with one of them opening up May 1st this year, and the other one opening up at the end of next year. So our build schedule for our senior living projects is typically between 15 and 17 months. And then our ramp up to get to strong stability in occupancy levels is about 18 months. So it's roughly a 3-year project from shovels in the ground until full stability of the projects.
Makes
so,
sense.
Go ahead.
Yeah, and your partner Cassia is really strong in the lease up process.
They are. So we will begin our marketing 3 to 6 months ahead of time. So we'll work closely with Cassia, not just on marketing, but even as we put together our pro forma, we go to them, we take a look at the expense profile. What's it look like for this particular market? What do the rents look like for this market? What do healthcare costs and food costs and things of that nature? So we really go through that in a lot of detail. We work closely with them so we don't have any real surprises as we begin to open up the projects and then move towards stability. So Cassie is just crucial in playing that role as we ramp them up.
Yeah, makes sense.
And by way of background, the process, let me just go back to the last slide.
Yeah, sure.
Briefly.
Sure.
Thanks. Just our overall process in determining a market. Just want to share a little bit about that as well. So, first we do some preliminary research. We look at the markets we have interest in. For us, it's in the Midwest. And we look at, things like demographics, right? What's the senior population growth rates look like? Where are the trends going? Where are the seniors moving? So those are the types of information we'll look at from a preliminary standpoint. If those numbers look good, then we'll do a preliminary market study. And, we'll be looking at the competitors, what do the occupancy levels look like for the competition, and what's the overall market look like? And has that preliminary study confirmed our early due diligence? And if that's the case, then we'll go about securing land, talking to our architects, our engineers, our general contractor, putting together the pro forma, and then we'll do a full-blown market study. And that's sort of our go, no-go point in time, where we're going to do an absolute deep dive. Has everything we believe to date confirmed to be true? And if it is, then that's when we begin to move forward. And that's when we'll put together the entire deal. We'll get the land locked up. We'll get the construction bids out. We'll get the equity and the debt put together, and then move forward as quick as we can to get shovels in ground. Yeah.
That's great, Michael. Thanks for sharing. That really illustrates kind of the process that you guys go through to make sure that you're set up for success. In your experience, how many what's the percentage of opportunities that you're looking at to where you've gotten to go, no go? How many of them end up being goes and how many of them end up being no goes?
Well, once we're at that final market study, we've got a pretty high confidence level that it'll be a go. We'll know early on at preliminary stage whether it's a no-go or not. So certainly a handful have fallen to this side. But we have a high confidence level once we get to that full market study that if the market study confirms everything that we believe to be true, then it's a go.
Right. Great. Thanks for sharing. So why don't we talk a little bit about your current project here?
Yeah, so our current project is based in Davenport, Iowa. It's a roughly $26.5 million project. 106 units are planned, and that's, the breakdown for us is roughly 43 independent living units, 35 assisted living, and I believe it's 28 memory care units. So, what we do is we really want to provide the full range of care so that someone who moves in at the independent level, can be cared for and stepped up for in care as they continue to age and can age in place. And that's one of the things that's just really critical for us is to put together a project that really serves our seniors. Our seniors have, they've experienced a lot in their lifetime, right? They've experienced resorts, they've been on cruises, and we want to provide that sort of lifestyle for them as well. So a lot of our projects are going to include like bistros and ice cream parlors and coffee bars, movie theaters, walking paths, gardening rooms, things like that, so that we can really not only help them age in place, but we want to keep them active and really enjoy this time when they're in our communities. So those are the types of projects we build. I think one of the things that really differentiates us in the marketplace is we have what's called tenant choice housing. So whether you're independent living or assisted living, you can pick the room that you want. If you want that 2-bedroom corner unit, it doesn't matter what care level you need, we'll bring that care level to you. Now that's different if it's memory care. Memory care has its own mandatory procedures under state law. But as far as those who are in independent assisted living, they have that tenant choice housing, which is a great differentiator for us in the market.
Yeah, sounds like it. It seems to me also that the product that you guys are developing, the amenities, everything's nice and new, and all those things, the bistro and all that stuff that you talked about, seems like that's probably going to be head and shoulders above a lot of the available facilities currently out there, right?
Yeah, we believe it is. And I think we'll talk a little bit more about this later on.
Yeah.
But, a lot of the projects out there are 25 plus years or older. In a senior living space, there was quite a bit of buildup in the 90s. And then it really kind of dropped off in the early 2000s up until about 2012, 2015. So there's a real gap in the quality of housing care for seniors. And so really we're trying to step into that gap and provide our seniors with the highest quality of living. So for example, our individual units have, quartz countertops, stainless steel appliances. They each have their own HVAC built in their own units. So they have their own airflow, their own heating and cooling. All those things are really key for our seniors.
Yeah, so they can control their own AC so they're not freezing. Love it.
Yeah.
Thanks for sharing. Yeah, we're going to touch a little bit more on some of that other stuff that sets you guys apart later on, as you mentioned there. But let's go ahead and jump into some of the data that we see on senior housing trends. So what we're looking at here is a chart. Graph that shows in 2019 about 16.5% of the American population was 65 years or older, a figure which is expected to reach 22% by 2050. And this is a significant increase since 1950, when only 8% of the population was 65 or older. And really the point is that this slide or this data illustrates the projected growth of the population over the age of 65. And I think it's pretty obvious to most that there's a large population aging, but it is nice to see what the actual data shows. This survey represents the percentage of older people who needed help with personal care from other persons in the United States from 1997 to 2018. And in 2018, the number of adults aged 65 years or older who needed help with personal care from other persons amounted to 7% in the United States. So this has been at pretty consistent levels, but that's gonna be strong and continue to grow as we move along. And so here we ask the question of what percentage of seniors live in senior housing type facilities. And based on 2019 estimates, over 18% of the 13.5 million households do, and that was 2 years ago. With the aging population growth, there will be strong and sustained demand going forward for these types of facilities. And what we're looking at here is the average monthly rental rate for the type of senior housing. So as Michael mentioned before, your facilities have independent, assisted, and memory care. And what you can see here is that independent is the lowest rental rate, obviously, because less services are needed. And as you move through each of these, the rental rate goes higher and higher, again, because of the level of services required in the facility. So what we know is that each senior needs a different level of care. The biggest takeaway from this data, in my opinion, is the median age of the buildings and facilities. And what you can see is that at all levels, the buildings and facilities are all older and dated, presenting what I think is an interesting opportunity, and I think Michael would agree, that new facilities will have a competitive advantage just because they are newer, modern facilities with infrastructure built out now with pandemic scenarios in mind. And so, Michael, I'd love to hear some of the feedback and thoughts that you have. You could probably speak to the type or level of care your facilities are now and how the pandemic has really sort of been a litmus test for your model.
Yeah, it really has. Unfortunately, the pandemic, as everyone knows, has heavily impacted seniors, but there's really a difference in two specific senior living types. On the one hand, you have its independent assisted living and memory care, which is a lower acuity. So that means they need less care than the other side, which are nursing homes, rehab centers, and places like those, which are, heavy acuity. The folks who are in those facilities typically have a lot of comorbidities. It's more end-of-life type care. And what we've seen, it's been reported, throughout the press, is how COVID has really, really hurt those facilities. And it's not just because of the stage in life that those folks were in, but those facilities, and you can see it right here, right? The median age of nursing care homes are 40 years or older. A lot of those buildings are all brick. They're very small, narrow hallways, low ceilings, lack of airflow. There's no touchless keypads. Just the small things that can make a huge difference in helping to control viruses as they propagate throughout a facility. So we've been incredibly blessed that we have not had any COVID deaths in our facilities. Not that COVID hasn't impacted them; they have, in the sense that we've had folks who had to leave and get care and then come back, and employees too. But the fact that we have, two-story entrances, we've got large rooms, 10-foot ceilings, very wide hallways, touchless keypads, self-contained units as far as HVAC, those were huge in helping to minimize the potential impact. And that, coupled with our property management group, Cassia, just really helped tremendously. They were able to obtain PPP very, very early on. So, or I should say PPE, very early on during the pandemic, and that made a huge difference. So I think we're going to see how, the age of the communities is really going to be a differentiating factor going forward for our seniors. I know as my parents get older, and that's a possibility, that I want them to have the best care possible and the best type of facility possible. And it's going to be, I think, a game changer going forward.
Yeah, makes sense. Thanks for sharing. It sounds like, beyond, the modern facilities and technology that you have in your facilities, that you also don't provide or have the nursing care, or the sort of the long-term, hospice type facility, right, to where that was impacted, unfortunately, the most during the pandemic. So you're sort of insulated from those risks, which I think is really great to hear as an investor, because obviously you see the headlines and can be kind of discouraging or frightening for that sector. So that's really great to hear, Michael.
It can be, and another, I think, important point is, Cassie was able to get our folks vaccinated pretty early on as well, and that's helped us tremendously as we open back up and we get new folks in the communities.
Awesome. All right, so why don't we go ahead and jump into the JKAM Diversified Fund, and I'll try to be brief here with this, guys. The JKAM Diversified Real Estate Fund gives passive investors the opportunity to achieve diversification, access to projects that are almost always off market, and participate in tax advantages of real estate. So the genesis of the JKAM Diversified Fund was born out of investing passively into real estate syndications. So Jack couldn't personally invest in the same asset class of the last fund, which was mortgage debt, because of conflicts of interest. So he started investing in private multifamily real estate syndications, and he found it to be really time consuming to source and review possible deals. It was also really time consuming to build out a diversified portfolio of operators, projects, and geographies. And this is because most minimum investments per project are $50,000. So, it's no big deal if you have, $1 million or more to invest, and hundreds of hours it takes to source, do due diligence, the paperwork for each project, and then manage all the K1s you get for each project. But if you're not that person, which I think most of us are, then managing all the if you're not that person, again, then you can really only invest in one or two projects, and investing in one or two projects isn't exactly diversification. Thus, the strategy of the JKAM Diversified Fund was born. So let's just briefly cover why invest with JKAM, and there are really three major reasons. Number one, with our experience and expertise, you can participate in quality, stable, risk-averse projects that are hard to source if you're not in the industry. Number two is the diversification you get in our fund. For example, you get exposure to many sponsors, operators, projects, geographies, and asset classes, which provide a balance of current cash flow and upside potential. And then the third and last is the tax advantages. As an investor in our fund, the accelerated depreciation of the projects in the fund passes through to our investors. So, for example, on a $250,000 investment, you'll receive $20,000 a year from the 8% preferred returns, but you'll actually be able to offset a portion of that on your taxes because of the depreciation that passes through to you. As I just mentioned, one of the benefits to our fund is diversification, and this really illustrates the overall fund allocation. So 50% will be in multifamily projects that are stable, fully occupied, have positive cash flow and upside potential. 25% will be in ground up senior housing development project like Michael's, and the one that we've shared today. And then 25% will be in transactions like non-performing loans and reperforming loans, where Jack and I have significant experience in managing thousands of loans. So thus far, the fund has made investments into 1 senior housing and 6 multifamily projects totaling over 1,200 units in 7 emerging markets and 6 states. Ultimately, the fund will likely make investments into as many as 15 to 20 multifamily projects and 3 to 5 senior housing projects. And there are 4 investor share class options. 2 are equity and 2 are fixed. The equity options are 8% preferred return and a 70-30 profit split on $250,000 or more. 70% of that profit goes to the investor and 30% to our fund. The other asset class there, the other share class, there is a 6% preferred return and a 70-30 profit split on investments less than $250,000. And that has a $50,000 minimum. And again, 70% of the profit goes to investors. Both equity share classes have a 5-year commitment. The fixed return options are a 10%, which is a 3-year commitment and a $50,000 minimum, and a 12%, which is a 1-year commitment and a $250,000 minimum. So you have some options in the way that you can participate in our fund. If you would like to see more detailed information on the fund offering, you can go to jkaminvestments.com/offerings and see more info there, like our private placement memorandum, the subscription agreement, and project details, and more. So I want to thank Michael again for joining us today and sharing with our viewers the compelling reasons to be invested in senior housing. So let's go ahead and open it up to some Q&A. All right, it looks like we've got a question here for Michael from John. He's asking, are there any specific markets that you're looking at?
Yeah, we're looking at specific markets in Nebraska, Colorado, as well as New Mexico. So, we're doing a deep dive in, certain cities within those markets. And as soon as we have more information, we'll be excited to share with the group.
Okay, awesome. And then we have one more here from Jeff. It looks like he's wondering where he can find out additional information on your company again.
Yeah, again, you can learn more about us at meadowviewseniorliving.com. So it's all one word, meadowviewseniorliving.com. And you can always reach me at my email, which is mosterhoff@gmail.com, which I believe is on the screen there.
Beautiful. If you guys do have any questions that come up, if you're watching this later, because we are going to record this and send this out, if you're watching it later and have a question, reach out to either Michael and I. You can reach us via email. And thanks again, everybody, for joining us today. Looking forward to seeing you guys on the next one. See ya.
Thanks, William.
Thanks, Michael.